Hello again, friends. Welcome to another episode of the Minds of Mortgage podcast. This is Kelly Yale, and today I am joined by Coby Hakalir. He is an extraordinary VP of, and you're going to have to get me right here, it's VP of Mortgage and Ancillary Services at
There you go. You got it.
T360. I'm proud of myself, to be really honest with you.
You
That's a
nailed it.
long business card title.
It is. It is. They charge us extra.
I love you have to pay the extra printing cost. So Kobe, you and I at the top of this, we're just talking about what it is you do. Tell the audience what it is that you do over at T360.
You mean aside from bounce around from podcast to podcast in the industry?
Honestly, that's a half of everybody's job right now. So I feel like we're definitely all in that
But I,
situation.
but
Yes.
I, this has quickly already become a favorite spot. And since you and I have met, I've been wanting to do this for a while. And I'm glad we've met. We actually haven't met in person yet, so we have to remedy that.
Okay.
So we've got to figure out when to do that. I'm assuming at an upcoming conference. But so what I do is I wear a lot of different hats for T3. I consult with a lot of our mortgage tech companies. I consult with a lot of our prop tech companies. But the essence of what I'm really driving forward, what I'm really passionate about at T3 is this attachment rate between mortgage, title, insurance, and real estate, kind of the housing services ecosystem. I really want to help our brokerage clients, our real estate brokerage clients who either don't have core services, as we call them, and want to, and figure out, how do I get this top line, which is already compressed, into my bottom line, which is even further compressed. But how do I take the business I am doing and squeeze more revenue out of it? And that's through, either it's an MSA or a franchise or a JV, and with a title company, mortgage company, insurance, home warranty, whatever I can do to have this kind of hub and spoke system where the real estate brokerage is this hub ingesting leads and then putting those leads out into the spokes, right? And so everybody's making more money, and we're all maximizing the customer experience, which the customers want, right? They want that one-stop shop experience. And so, I don't think it's ever going to be a 90% market share, but I think it's the way that real estate brokerage is going to survive in the next generation, because we've seen the last 5 years, their model isn't working, right? They're hiring top agents and they're paying them, basically 100% of their commission. So they're not making money. And so when you've got a business model where your top salespeople are not making you any money, and mortgage sees this a little bit with their top producers, but their top one or two producers, sometimes from a margin perspective, they won't make money for the company. With real estate, it's more like your top 20 or 25% producers. And so how do you squeeze money out of the leads coming in from that middle section of your agents? And that's what I'm working on. And that's what I'm super, super passionate about. I've always thought that mortgage and real estate is one ecosystem. We're serving one consumer. And so I have the chance at T3 to do that, and just generally be an evangelist for the industry. So, worth it spending a little extra money on the business cards, and super happy with what I'm doing.
Kobe, I had no idea that you and I intersected at so many different points. I think before you described that for me, because I absolutely believe in the one ecosystem. I believe that we are stronger in our partnerships. I work with a title company that really has one of to my knowledge, the most compliant JV model that exists, and I learned a lot about sort of. JVs, I would say. I've learned a lot more about JVs in the last 6 months than I ever knew before. But my philosophy, since I entered into mortgage 12, 13 years ago, has always been this is a team, and your
Yeah,
teammates are going to make your business successful, period. And
that's
I
right.
love that that's what you do is you put these teams together so that people can be more profitable.
Yeah, it's an incredible experience because you realize that there's a tech solution to all of it,
Yep.
but really what drives it, right? And you know that better than anybody. What drives the tech is the adoption or the automation of that tech, right? It's the people that are using it, it's the people that are embracing it, it's the people that are buying into the culture, saying, all right, we're one team, we're one culture, we're one group, right? And the customers are North Star, and we're going to use all these tech solutions to get us to where we want to be. And so it's a really eye-opening experience because you're really working with people and you're finding tech solutions that complement the people, right? But if the people aren't doing what they need to be doing, if the culture isn't there, it's a really, really steep uphill climb.
And I just completely agree with that. One of the sort of philosophies, right, is this idea. You can either you can go to a primary care physician, you can go over here and see your OBGYN, you can go over here and you can see your dermatologist, you can do this, or you can go to one of the collaborative health places, right, where they know all of you, where they understand and they interact with one another. And that same idea of buying a home should be accessible to most people, right? I shouldn't have to go and find and pick and choose and figure it out on my own. I should have one place I can go and say, I would like to buy a home. And everyone says, great, we have the ideal people for you. Here is our first time home buyer specialist in mortgage. Here's a realtor who is really smart about where you're looking to buy and the kind of places that you're thinking about. Here's somebody who's going to walk you through the insurance, so we're totally sure that you're covered and you understand what you're doing. And here's our title company that's going to make sure that everything stays safe the whole time. This is your team. We are aligned, and you're going to have a great experience.
Yeah, and that's perfectly stated. The flip side of that, right, is when that model is broken, right?
Mhm.
And when you're looking for that one-stop shop experience and the realtor, tells you, "Hey, we've got a mortgage company, we've got a title company," and the handoff is terrible, right?
Yeah.
And so all of a sudden now there's no transparency, there's no workflow integration to get that lead into the right hands. The title person can't be found, the loan officer is not updating the realtor, the person who is supposed to work on your insurance policy isn't getting back to you or is giving you quotes that aren't apropos for the property you're trying to buy. And so that experience that you've now set up to the customer is, hey, I've got all these people in house, but because it's clunky and because the handoffs aren't working and because the communication isn't in place, it's now become a terrible customer experience. And your chances of recapturing that customer post funnel just have gone down exponentially. So it's so important to get those little things right if you're trying to present that to the customer as a one-stop shop.
Automating the best intentions of a loan officer was the backbone of what I started doing in 2014. But, long before there was AI and long before there were all these, like, really honestly, before there were ways to connect things easily, right? Um,
Mm-hmm.
we quarterbacked the entire process via the loan officer. And so what we would do is we would do as soon as we went under contract, we did a big email that was like, here's exactly what you need to know about closing, and here are all the point people, and here's how this is going to go. And
Yeah.
then we would just talk to title on behalf of the LO. We would talk to the realtor on behalf of the LO, keeping them totally abreast as to what was going on. Anything that we sent over to the borrower, we would CC that realtor. But where the magic of that was, which people didn't understand. Did that win JD Power and Associates, best customer experience for like 6 years in a row? It did.
Yeah.
But why? Not only was it because the loan officer was really totally the point person there, but they didn't have to do anything because the communication strategy through the transaction was already pre-done for them. But the listing agent was getting this great information from this loan officer that they'd never worked with before. And then after the close, we would ingratiate that listing agent. After the
Yeah.
close, we would drive to review. After close, we would do all these different things on behalf of the title company, the realtor, who'd never asked us to do that. But that was what really lifted the entire experience up. And when we used to do it, it was building workflows into a CRM and being smart about data and what would trigger when. But now there's almost no excuse for any
No.
mortgage company to not have a dialed in consumer process that takes all of the players into consideration and provides that communication strategy.
Yeah, unfortunately, a lot of mortgage companies are still operating like it's 2007. Their marketing strategy is built, for that era. Their technology, for the most part, is built for that era. A lot of the loan officers that are working in that mortgage company are from that era. I started in this business in 1997. And I was 19. I hadn't yet hit my 20th birthday. I was 19. I was working for Fleet Mortgage, and I was the youngest person in the office. In fact, I first day I came in, I was wearing a tie. By 10 o'clock, I'd spilled coffee on the tie, and the tie was gone. So that was the last time I ever wore a tie. So I wore a tie for 2 hours in the mortgage business. Um, But I was the youngest person in that office. And through my career in mortgage, through leadership and when working at various companies, I pretty much was always the youngest person in the office. That didn't change. And so, we've got to take a look at what we're doing, both from a, the future of our industry standpoint, the future of technology in our industry standpoint, and the way we communicate with customers. Because one of the reasons that we're failing, for the most part, with communicating with customers is, as millennials and Gen Z buyers are continuing to enter the market, we're pulling away from them from an age standpoint. We're not speaking their
Yeah.
language. We're not communicating with them. We've called millennials lazy, and then what's the only thing worse than lazy? What we've called the Gen Zers disinterested, right? And so, right, if I ask my daughter to clean her room and she wants to, she's not doing it because she's lazy. If she doesn't want to do it at all, she's disinterested, right? So as we move further and further, and I think she's somewhere in between, by the way, but as we move further and further, we've lost the ability to communicate with some of these customers, and part of it is because we're not hiring younger people into the industry. Part of it is because we're not respecting and understanding the journey. Look, the Gen Zers saw their parents lose wealth in their homes, right? They saw equity evaporate. They may have seen their parents have to give the keys back to the bank, and so the home buying journey for them, this idea of your home as generational wealth, has some holes in it for them. It has some fear, and we need to address all those things. So, yes, to automating communication and to making that customer seamless, that customer experience seamless and enjoyable and wonderful as getting financing can be. But we need to do it speaking their language and meet them where they are.
Well, you bring up an excellent point, and I mean, I'm going to kind of double down on it, to be fair. Having been in this industry now from a marketing and consumer experience perspective, right? Understanding the what we call in marketing ICPs, which is just the individual customer profile of every single one of our buyers. People used to make fun of us because we had like 45 B2C campaigns and we had 3 different ones for first-time home buyers. And people would say, that's too many. Which one, how am I supposed to? I'm like, that is not nearly enough.
Right.
Because the reality is this: the mortgage industry and its fanciful self, right, looks at things in an interesting way, right? People are going to come to us. People are going to know us. They've seen us on an arena. They're going to do a thing. And if they don't, what's wrong with them? Why aren't you buying a house?
Mhm.
You know, like uh, date the rate, marry the mortgage. How dare you guys? Think about the people who you made that promise to 2 years ago. How they doing? Because I guarantee they're
Yeah.
divorced. But
Right.
these little things that we love to sort of
Divorce
say,
the loan officer.
divorce the loan officers, correct?
Yeah.
If we, for some reason, the way we approach the market is an interesting thing, right? If we think about, let's millennials, Gen, it doesn't matter who we're going to talk to, what segment of what audience, right? The reality is the average age of our first time home buyer is nearly 40 now, right?
Yeah.
But let's assume that that person who's buying that home has really wanted to buy a home for a long time. Why were we not talking to them about how? Why
Right.
don't we get an understanding of what keeps them from that and solve that problem so that our long-term pipeline is actually what we think about instead of it being this constant, okay, I got a referral, okay, I got a lead, da, 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 da. It can't always be that. We have to be strategic in our approach.
Yeah.
How do you feel
Yeah.
about
And
that?
I feel that it's exactly the right approach. But that there are two different elements when it comes to buyers. There's buyer demand, which we're seeing,
Mhm.
a lull in right now. Interest rates, housing prices, affordability, all of that. Then there's buyer desire, right? And desire starts well before demand starts.
Yeah.
And you made a point about how we're closing in on 40. I think the number is 38 right now.
Hmm.
50 years ago, 1975, it was 27.
Right.
So in 50 years, we've managed to make homeownership more elusive by 11 years for people. That is an abominable failure on the part of the housing industry, and that extends
Yeah.
everywhere from mortgage all the way to housing policy in little rural areas. Right next door to me in Petaluma, California, passed a housing policy in 1971 that limited the availability of homes, and that tipped off what has become in California a scarcity problem, right? And so you've got in California, you've got the incumbents versus the newcomers, and we've made homeownership that much harder for the newcomers because the incumbents want the value of their homes to remain intact. And so they don't want to let more people in unless they're ready to sell. And in California, they're almost never ready to sell because of Prop 13. We've got tax issues that keep people in their homes from selling, right? So don't want to go off too much on that tangent. But we have issues in this country with home affordability, home pricing, but the buyer demand is there. The kids, and I call them the kids, they're in their 20s, they do want to buy. They have the desire to buy. They understand they're better off buying than renting. They're very well informed. My daughter is 11. She spends time on social media, much more than I'd like, despite all the little catch-alls I put on her phone to stop her. She works around them because she's smart and she's 11 and she's been using technologies and she's 2.
Right.
They are informed. They understand that buying a home is good for them. They understand that making a landlord rich versus paying down, principal on a mortgage, which one is better. They understand that. We're not doing a good job reaching out to them and educating them and moving them along in the process. And if we did that, if we met them where they were, if we reached out to those 20 somethings who are in the job market, working, trying to save money, right, living with 5 different roommates and eating SpaghettiOs, if we reached out to them and started them on that journey earlier, man, could we move some of the needle on this? But we're not doing that. We're celebrating when they're finally ready to come into the market, when they're 38 years old, and we're wondering what they've been doing all this time, and we've not been in touch with them once.
Well, okay, so let's assume I'm this 27-year-old, right? And I'm living in this situation and I'm thinking, gosh, I want a place of my own. I want to buy a townhouse. I want to buy a condo. I want to get like a house, or maybe I just got engaged and I'm really actually thinking about doing that. Why does this industry still think that my first move is going to be, I'm going to ask my dad to find some 55-year-old somebody stranger that I can go talk to about this stuff? That is not how people are going to shop for a mortgage.
Right.
Maybe you have great real estate partners, and maybe those real estate partners are the kind of people who really like to lean in on their customers to talk to somebody who's truly going to guide you financially, which is hopefully what a really skilled mortgage professional is going to do. But they're not going to get to you, right? It's really not. And maybe, and so let's think about it from the realtor perspective. So I've got a real estate agent who's 28, who's building this dynamic career, who's building out on the back of technology and social media. And now my
Yeah.
loan partner is also still some guy my dad knows, or like some whatever. It's like we have lost.
Who looks like me?
Well, I mean, to be fair, I say it all the time, right? I
Yeah.
mean, and I know I'm probably, it's not the best thing to say, but it is the reality. I mean, go to a mortgage conference, find me the not you.
Right.
You know what I mean? So I just feel like our approach to buying has to be so different. I actually was talking to Dave Savage about this on Monday because I made the grave error, or a really great discovery. I started looking at houses on Redfin,
Mhm.
and I have been so, I mean, I think the word is jealous is what I'm looking for, because so many of the ideas that are within their app are things that we so wanted to do for home buying, but the way that it is accessible and shown to me, the way that they have, like, okay, I'm looking at this, probably a tear down kind of house, because that's actually what we're after. The other people would tear down, but we want to redo. And so they have filters that you can redesign a room right in front of you to your
Mm.
specific taste. Never do I get smacked around. Oh, by the way, you may not know this, but do you see Powered by Rocket? Hey, did you need us to talk to you about financing? And it's so well done that I just don't know, to be honest, how people compete with that kind of consumer experience, because that's, to your point, a complete ecosystem right there, right?
Right.
This is right where real estate and mortgage intersect.
Yeah. Mortgage has a problem, and that problem is the crack cocaine of the refinance. Mortgage feels like, if I just wait it out, 3 or 4 years, rates are going to come down. I'm going to refinance all the customers. Well, I think we're in for, what's the word I'm looking for? A rude awakening with that.
Huh?
If you think about what we experienced in the 70s between inflation and inflation and interest rates, right? They were high throughout the entire 70s, and that dates back to Nixon, bullying his Fed chair at the time, something that, surprise, surprise, we're seeing again. Um, and so we paid for that for about 10 years. We finally came out of it, but it took a good 15 or 16 years to get to the mid 90s, to where interest rates finally came down again, to where people felt good, and they were just down in the sevens and sixes. It wasn't like they were back in the fours and threes.
Right.
Then we had a pretty good run for another 15 years, and then we had the Great Recession. And the Great Recession, we'd have probably been coming out now if not for the pandemic, right?
Mhm.
So these cycles really are not 3 or 4 years; they're sometimes 10 to 15 years. And I think we may be in the beginning stages of that. And mortgage has to get away from this idea that, well, I just need to wait out the market now and I'll be saved by refinancing. You know what? The realtors don't have refinances. They don't have that market hedge that mortgage does. And so it's forced them to be more innovative. It's forced them to figure out how to elevate that customer experience. It's forced them to figure out, how do I navigate in this brave new world? Because they can't, rates drop and they get a little bit more activity, but they don't get a flurry of refinances like the mortgage industry does. And so we need to get away from that mindset that, it's, what was it, survive till 25? Well, how about survive till 35? Why aren't we thinking about the next 10 years of mortgage and where this industry is going to go and where it can go if we just stop focusing on the interest rate cycles and we start focusing on the customer experience?
I mean, it could be written on my gravestone what you just said. I mean, I've said it
I
so
hope it's
many.
not, but I appreciate that.
It's been so. I have said, well, look, my second week in mortgage, I asked a branch manager. No, technically the branch manager asked me, like, what's your strategy for this week? And I said, I'm going to be connecting with real estate agents here because we really need a bigger brand presence, and we need better collaboration. And this is,
Yeah.
2012. And he said to me, we're in a refi boom. We don't talk to realtors during a refi boom. And I'll never forget that moment, because it was absolutely what shaped every day of my career from that point on, because I thought, I've never heard a more short-sighted sentence in my life. So let me make sure I've got this. When things are good and purchase is good, I care about you. But when refis are up, I got no time for you. If I was a real estate agent, I would never work with a loan officer like that, ever.
Exactly. Yeah. It's like the bad boyfriend who only shows up when he's out of money, right?
Yeah,
You
a
know.
million percent. And
Yeah. I don't even know what movie I just referenced, but seems like a lot of them, right?
well, funny
Um,
that you say that, because I keep referencing Back to the Future, because I keep telling loan officers, I'm like, if you're waiting for the DeLorean to take you back to 2019, if you think this is going to be a cycle all the time now, let me explain something to you about refi. And look, I don't know anything about mortgages. Don't even start. Okay. I don't even claim to know anything. I'm not trying to be an expert in that at all. Let's just say this: in a world right now where direct to consumer is putting so much money into tech, you have to look at that situation in a refi boom, and then you have to look at the servicers. You have to look at all these. Data is everything for human beings right now. Think about what are the odds that these people who did a loan with you are just coming back because you looked in Encompass and saw that they have a higher interest rate and you called them? Like, maybe, but how many people
yeah.
called them before that? Because other people aren't fishing for information.
Yeah, they've forgotten about you, mostly because uh, your post funnel plan was to send them happy Halloween postcards and maybe send them a happy birthday text. So yeah, they've 80% of the customers forget their loan officer within the first year. That number has been consistent for a long time, which means that we've not moved the needle on that because we haven't done anything to reach out to those customers. And there are some tech solutions that are trying to solve that issue, but again, it's the adoption part that's not happening. And the culture isn't changing around those customers, and so we're losing them. And with servicers coming into the mix as originators now, you bet your bum there's somebody after your customer the second they close that loan, and there's somebody doing a
Yeah,
better job than you keeping in touch with them.
it's
So
it's beyond, yes, it is so time. Well, I'll lean into the tech part on that. Tech adoption, probably the thing that I hate most about the industry, the thing that pushed me so far into the world of automating almost every single thing that ever happened. Because if
mhm.
I had to wait for the loan officer to get excited about engaging with the tech, or if I had asked the loan officer to sign into 4 or 5 different tech platforms in order to control that consumer experience, I'd have been screwed, right? I'd have
Right.
been every other CRM company in the world that, by the way, still has a problem with adoption, because within the company there's not somebody who owns that sort of excitement and that driving force, because CRMs don't build to create these automated easy solutions for loan officers. And because honestly, after 4 or 5 years of extreme fatigue of this market, and also the general fear of what technology is kind of going to change in the industry, it's no wonder people are afraid to adopt technology. And so I totally get that. And then if you don't have a C-suite, by the way, who speaks technology, right? As I mean, to be fair, I don't know who you talk to, but typically the C-suite, you may have a CMO, CIO, CTO, maybe. But if you don't have people who are driving that change and excited about that change, it ain't going anywhere.
Yeah, it does. It does start from the top. The culture needs to start from the top, and unfortunately, we have across the board, and it's not across the board. It's just large swaths of the board
Mm-hmm.
where leadership is not leaning into the tech. They're not acknowledging that AI is going to be a major part of our future. And I think there's a little bit of fear there too, right? If we lean into AI, well, what does that mean? Is that going to replace the loan officer? Is that going to replace my entire back office? And so I think the fear of what that tech means, and this isn't anything new. Anytime there's new technology on the horizon, anytime there are new things that could help this industry, we seem to be the last ones of any major industry. And we are a major industry. The lending industry is one of the biggest ones in the country. We seem to be the last ones of any major industry to adopt it, and certainly putting those automated workflows into place. And the companies that do that, the Rockets of the world, the UWMs of the world, and I know those two don't necessarily like each other, but they both do a very good job of implementing new technology. UWM has a IT team of 1,700 or 1,800 people. I mean, that's unbelievable, right? And they're winning because of that technology, and despite some of their misaligned policies, but they're winning because of that. Rocket's making major moves on that front. You just illustrated one of the things they're doing with their app. That's just terrific. And there are other mortgage companies. If you look at the Bayview and Guild acquisition, and Guild does a tremendous job of mixing boots on the ground and the community loan officer with really best in class technology, and so there can be a mix of both. There, you can still be the traditional loan officer, but you can use tech to make your job easier. And a lot of loan officers resist that, and a lot of leadership that come from the loan officer community resist that, and they still think it's about having a Rolodex on your desk and calling. And they do believe, unfortunately, that when rates are low, you dive into your database and you tell your realtors, hey, I'm going to be busy for the next 12 months. So we've got some paradigms that need to shift in our industry if it's going to stay viable for the next generation. And so there's hiring younger people, there's leaning into technology, and there's I think we've said it, and I think it's the overarching theme is leaning into the customer experience. That needs to be paramount. It's what the realtors have been doing for 2 decades now. They've really figured that out to a large degree, and we need to be right there with them.
I am a consumer experience freak, obviously, right? Uh, I don't think anyone would waste time by examining their customer experience at their company. And I think that there's some sort of mental hurdle. I don't know what it is. If I could explain it, I already would have hopefully
It's
fixed some of
age.
this stuff. But if you think about, like, look, you can have a company of 100 loan officers, 1,000 loan officers, right? 10,000 loan officers. The reality is that you need to have a very systemized consumer experience. And we spent so long in this industry being like, however this loan officer wants to get this money through the door, we're fine with. And everyone is their own artist, painting on their own palette. And it's like, wait, okay, yes, no one wants to take that personal experience away. But
Yeah.
can we count on technology to make sure that the minute somebody needs to know something, they know it? Can we count on technology to maybe take a first pass at all the documents that you were just sent so that a human being doesn't have to waste 3 hours doing it and instead can take 3 seconds so that your borrower instantly knows the kinds of things you still need from them? There are
Hmm.
going to be things that we can lean into that are not going to massively change the game. But I would 1000% just challenge anyone in sales in mortgage. Take a minute to look at the consumer experience from their perspective with you. Because what you think they're experiencing and what they are experiencing may be two separate things. And analyze where you actually need help with that. And humbly, I would say that in general, you shouldn't work at a company that doesn't talk about this. And because if the company you're with isn't psychotic about the experience that the consumer and the realtor have when they work with us and blowing that out of the water every time and making you look like a rock star, then you got to find somewhere that does.
Yeah. The top 1% loan officers in this country are still closing around 75 million a year.
Hmm.
Despite interest rates. The top 5%, I think, are somewhere in the 35 plus million in volume, and the top 25% are also in the six-figure range, somewhere in the 20 million area range, right? Or maybe 15 to 20, but they're still making six figures. So, you know, learning what those loan officers do, looking at what those loan officers do, it is all about keeping in touch with their customers and making sure that they have this elevated white glove concierge level service. And it's the same service they provide to the realtors. It's the same service they provide to their customers. They don't forget about their realtors during refi booms. In fact, they lean heavier into their realtor database because they know that the bottom, 75% are not talking to them, and they're just trying to scrape through their database, trying to steal a refi here and a refi there. So there are a lot of things that we can learn from the top 25% in this industry, because the top 25% in this industry are doing all of the right things. The
Yeah.
bottom 75% of this industry are still stuck in the same cycle that they've been in forever. I had a boss once that said, there are some loan officers that have 20 years of experience, and there are some loan officers that have 1 year of experience 20 times.
Yeah.
And that, that always resonated with me, because I led loan officers for many years, for almost 2 decades. And I can tell you that there were some that just repeated the same year, every year, year after year, and they did not ever get better. They either didn't want to respond to coaching. They were afraid to get out of their comfort zone, which is the majority of them. And they just didn't see a reason to do anything other than, maybe add a realtor during high interest rates and try to squeeze a deal out of them, and then just wait for the next refi boom. Um, and I saw a lot of loan officers, and who they are. We call them refi loan officers,
Uh-huh.
who that's they built a database and just kept churning and churning and churning. So again, that's not the future. I would like to think we have a better future for our industry, with younger loan officers doing more robust customer experience activities, figuring out the post funnel activities that actually bring customers back to improve that recapture. It's one of the things I'm most impressed with Guild, is the recapture rates on their customers that they
Uh-huh.
close. They figured out how to keep in touch with them. And so I think that if you look at who the top companies are now, there's a lot of great examples of learning for a company. If you're trying to grow and figure out what the right path is, just look to the people at the top on the wholesale side, on the distributed retail side. There's plenty of great examples there. It's just we're not doing enough of it. There are not enough of those examples.
You make such a good point, and I obviously, we've had conversations with all kinds of industry experts for many, many, many years, right? You've been in as many as I have, I'm sure. But one of the interesting things about sort of hiring younger people is, you also have to have the framework to do it, and by that I mean, if you gave me 10 25 year olds, and those 25-year-olds were hardworking, hungry, and willing to embrace what we would consider change, but willing to just embrace something new. And you said, plug in here, you'll make 100 grand. Here's what I need you to do. I need you to curate and curate. I need you to put nothing but data into this database. And I will show you how to curate those relationships. And this is how you'll move forward. But I guarantee you're going to close at least a loan or two a month because we're going to show you how to do it. Those people are my favorite people to work with. Because if I go and I say to a 45-year-old loan officer, hey, you're going to make $100,000 this year, and I just need you to do this and this and this. The feedback I will get back is, I don't want to do that. That's not how I do that. And that's not going to work for my business.
Right.
And that's where that's a tough part of where tech is meeting mortgage right now, is that you have non-adoption based on non-desire.
Yeah, it's fear, right? It's all fear based, right?
Sure.
It's that's not how I do it. It's not how I've done it. I'm afraid to do it a different way. That's why younger people in the industry are so vital. They're not afraid to try new things, and they can be the tip of the spear, right? If you're an older loan officer and you see younger loan officers in there and they're doing stuff different, you can learn from them. You can collaborate with them. When I was a younger person in the office, I had older loan officers, and I would stroll over to their cubicle and I would ask them, hey, what are you doing? And how do I solve this problem? That kind of collaboration across generations is so super important because there's learning on both ends, right? Imagine you walk over now, if I'm a younger loan officer and I show the older loan officer what I'm doing on my social media and how they can do it too, and they explain to me, what I can do to overcome a DTI issue I've got, right?
Right.
We're missing that kind of collaboration in our offices because we don't have a good cross section of generational loan officers in our midst.
Well, we could probably talk for the next hour and a half about all of these things, right? And you bring up a really good point, which is mentorship in this industry, right? Or partnership in this industry. It used to be like, this is my little spot. I'm taking this spot. Like, this is mine. And I like you totally believe that when you have new ideas, or when you have such a wealth of knowledge and wisdom, you kind of owe it to each other to bridge the gap, right? Because absolutely, it's the same thing with people who have big books of business who might be looking to retire. If that is you, find yourself someone who really wants it. Train that person about all of this great knowledge you have, and also listen to that person on new ways to approach that,
Yeah.
and share that moving forward.
It's great advice if only the mortgage companies would let you hire that person, right? If you're a mortgage broker, can you do that? If you've got a one-person brokerage, yeah, you could bring an apprentice in. If I'm working at a large retail company or a large bank, are they going to let me hire somebody younger who I commit to train? Absolutely not. So we need to shift that, because that's an excellent point you make, and that's what we need for the survival of our industry in the next 25 years.
It's weird. To be fair, Coby, I've stopped thinking ahead, and that is a really weird thing, because when I entered the industry, I was such a disruptor. I can't even believe anybody let me stay. And then I was incredulous for a really long time as to how we aren't all sort of rowing in the same direction. But I always prided myself on being able to at least understand where we were going. And people, when they talk about 10, 20 years in mortgage, I don't ever go past 3 years anymore. And that's a weird thing to project for. And the reason is I genuinely don't know. I have no idea what's going to happen next. I mean, people get paid in life, lawyers, doctors, you name it, because you have incredible knowledge that took you a long time to get, that you're able to give to someone else.
Mm-hmm.
Chat GPT, any AI, it's leaning into that library. And people are going to go there and say, hey, Chad, I want to buy a house. What do I do? Right? How do I do this? What's next? If we are not going to be paid for our expertise, then we have to work in an entirely new model as well, right? And I've been lovingly referring to it as the pay for consulting, right? If a buyer is able to do this, and this on their own, they're still going to need to talk to someone. They still need that relationship to just ensure that what they're doing is the right thing, because they may think or get an answer that seems like it's correct, but a very skilled loan officer is going to know 100 things outside of
Yeah.
what they're going to get from that. And I think that there's going to be sort of this hybrid of very informed people who want to work with someone and who makes those final decisions and makes that experience easier. How do you feel about sort of that opt-in kind of loan guidance?
I think we're already there. I think
Yeah.
we've been there for the last, 18, 19 years. I think from the advent of the smartphone, we've seen customers that are more informed, more aware, more interested, more cognizant of their options, more particular about who they work with. I think AI is only going to augment that and make it easier to do that kind of research. I don't think AI is coming for all our jobs. I think AI
Yeah.
is coming to make all our jobs easier. And I think we're going to see a next generation of customers that are even more informed and more deliberate about what they want out of the business. So I think if I'm a loan officer, I'm leaning into that, because AI is not going to replace the loan officer, but it's going to replace the loan officer who uses AI that, with a loan officer that does not. And
Yeah.
so, you're missing the boat if you're not leaning into it. But I see it making our lives easier, our jobs easier, in the same trajectory, in the same vein that the smartphone and social media has done that. The good parts of social media has done that. And brought a lot of awareness to a lot of things. So I lean into it, embrace it, use it, and figure it out.
Well, Kobe, I genuinely, like, I say this a lot, but I mean, sometimes we get in these conversations, they're so good. And, but I, then respecting that it's a podcast, but I just loved talking to you. And if anyone's looking for Kobe, he's always on LinkedIn. There are excellent people to follow. He is one of them. And at some point, Kobe, I would just love to even have you kind of explain your sort of what the model is that you're building out for companies now, because I think it's so fascinating, and I do believe that these partnerships are the way of the future. So I would love to chat with you again.
Yeah, let's make sure we do that.
All right, friends, thanks so much, Kobe, for your time.
All right. Thank you, Kelly.